Hi everyone and welcome to this YouTube video. It's going to be all about my top 5 Aussie shares to invest in right now. So 2022 has not been good to the share market. I spoke about this in my last video on why the share market crashed. However, it is always good to buy the dip. So here are my 5 shares that I think you should invest in right now. Please note that I am not a financial advisor and make sure you do your research before you invest. Number 5 is WiseTech Global. WiseTech Global provides software to all logistics companies that send internationally. They currently have over 1,800 staff. Looking at WiseTech Global's share price chart, you can see continuous growth throughout 2021 with a small correction in 2022. The share price increase was due to really good revenue results at an increase of 18% throughout 2021, which led to a 56% rise in share price for WiseTech Global. This could be a good time to buy because the price is currently undervalued and also is in an industry that is worth over $300 billion. Number 4 on my list is Xero. Xero provides accounting software to small to medium-sized businesses and is becoming an international name. Looking at Xero's share price, you can see that there was an increase throughout the year with a small correction in the middle of May, and then an increase going on from that throughout the year. And then in the beginning of 2022, there has been quite a large dip in the share price. Despite the dip in Xero's share price, I am still really high on this brand. And that is because digital transformation is becoming more important throughout today's society and business. It helps them with their HR, accounting, and also content management, which is the big thing that helps businesses grow. Also, Xero almost spent $170 million in product investment, which can only be good for the share price in the future. Number 3 on my list is NIB Holdings Limited. NIB is a private healthcare fund that currently holds around 10% of the market in Australia. Looking at the share price of NIB, you can see there was a good increase in shares at the beginning of 2021 with a small correction in August 2021. And since then, it's been quite steady. So why am I high on NIB? It's because its return on equity is currently sitting at 23%, whereas its competitors are sitting at only 12%. The return on equity shows how a company's value is increasing and also shows you how they're spending investors' money. This shows that NIB is currently a very profitable firm and is doing the right things to have continuous growth in the future. NIB also saw profits increase by 62% in August, and they also paid out their biggest dividends in their history, which bodes well for their future. Number 2 on my list is Flight Centre. Flight Centre is one of the biggest international travel agencies and has over 2,000 different businesses across 11 countries. Looking at Flight Centre's share price, you can see at the beginning of 2021, it actually had a decrease in price, followed by a sharp increase in September and October, followed by a correction at the end of 2021, and in 2022 it has had a steady increase. The reason why Flight Centre is so high on my list is because the Morrison government recently announced borders reopening for the first time in around 2 years. This led to the Flight Centre share price being at its highest point for the past 3 months. It is my belief that as time goes and international flights become more and more frequent, the share price of Flight Centre will continue to increase. Number 1 on my list is Pilbara Minerals. Pilbara Minerals are located in Western Australia and produce lithium and also tantalum. Their share price actually increased by over 210% last year and was one of the biggest growth stocks on the ASX market. Imagine if you'd invested $1,000 at the beginning of last year into Pilbara, you would have actually gone away with gains of around $2,000. Looking at Pilbara Minerals' share price, you can see a continued growth in 2021. There's been a small correction in 2022, which I believe will be a short-lived thing. The reason why Pilbara is number 1 on my list is because of tantalum, which is a key metal for semiconductors. Semiconductors are actually used for electronic devices in the healthcare industry, in the computing industry, and also in the military industry as well. This brings us to the end of our video. Let me know in the comment section below how you are dealing with the dip and whether you are actually investing in more shares and what your top 5 shares are on the ASX right now. And don't forget to subscribe to my YouTube channel. I'll be making more content like this on shares and cryptocurrency every Friday from now on. Cheers.